welcome. You're watching the Business Today show. I'm Sakshi Patra. First up, the top news that we're tracking tonight. A day after TCS, Infosys also disappoints D Street, reports a fall in both net profit and revenues in the January to March quarter, and also a 4 to 7% growth estimate for the fiscal year, which is below estimates. TCS confirms what was feared all along, tells BTTV in an exclusive chat that artificial intelligence is already more productive than humans, says it's been harnessing the power of AI for the past 32 years. Bulls once again have an upper hand over bears on the Dalal Street. Indices recover at the fag end of the trading session after being red all day long. 9 days of a rally is the longest in 30 months. Commerce Minister Piyush Goyal hard sells the India story to the top CEOs in Rome. BTTV's Karishma Sudani brings you the latest updates from the Euro trip. Italian auto giant Piaggio also reveals its big India plans in an exclusive conversation with Business Today TV. Says its plans are to big investments in e-mobility area. And straight on to the top story tonight. Infosys has disappointed with its fourth quarter results. We have seen that the tech bellwether has announced a 7% quarter-on-quarter fall in the net profit to $61 billion. In what is being seen as a direct impact of the economic troubles in the West, Infosys revenue was down 2.3% to 374 billion rupees. Now, Infosys also announced that its operating margins were down 0.5 percentage point in the fourth quarter and also reported a fall in the employee headcount. It, however, has said that its current financial year
pipeline of large deals is extremely strong. Several of these are mega deals, and several of them are opportunities for cost and efficiency programs within clients and consolidation opportunities. Based on our sustained momentum in the financial year 23, the strong pipeline of opportunities, especially the ones in cost, efficiency and consolidation, while also keeping in mind the uncertain environment, our revenue growth guidance for this financial year is 4% to 7% in constant currency. Our operating margin guidance for the financial year is 20% to 22%.
And TCS results may have disappointed the street, but the company says the next couple of quarters will more than make up for it. Also, in an exclusive conversation earlier, TCS COO N. Ganapathy Subramanian actually told me that some of the deals that were postponed due to the banking crisis will actually fructify in the coming months. He also talked about layoffs and how artificial intelligence is already pipping humans in productivity.
Mr. Subramanian, like you pointed out, there has been negative sentiment due to a lot of factors globally. Have you really noticed a quantifiable impact on the client spends with respect to the financial crisis that has been brewing in the US starting February? Any deal cancellations, any delay in ramp-ups? And how long do you see the effects of the financial crisis really prolonging for you as a sector and as a company? How do you assess the likely impact going forward? Is it going to be restricted to BFSI or spill over to the other verticals as well?
Overall, I think I don't see fundamentally anything wrong in the technology sector, right? Especially in the IT services side. We have done about $10 billion worth of order bookings during the last quarter, and it's very broad-based across industries, across geographies. Okay, and these out of this $10 billion, $5 billion came in from North American clients. About $3 billion came in from banking financial services clients. $1.3 billion came in from retail consumer product services clients. So it's a very, very broad-based. Interesting thing about this order booking is also that a number of large, medium to large deals, $50 to $100 million deals were seen in that. Only one mega deal, as we call it, about $700 million worth of that. So if you look at all of this, I think the environment remains quite stable and there is an optimism that we can get to execute all of this. Right? No issues per se. As I said,
Right.
there are no large deal cancellations.
Everybody's been talking about these evolving technologies like AI and GPT of late. Are your clients also demanding for wider integration of these emerging technologies? What is going to be the focus of TCS on such technologies going forward? There are two parts to this question. If you are looking at AI as an emerging technology that would help reduce your need for any specific hires or jobs going forward in the future, I'm asking, and how significantly could this generative AI space really contribute to your own top line and margins in the future course?
I think generative AI is an interesting technology, and certainly I think it offers a lot of potential, no doubt about it. It can do many things very differently, and has the opportunity to improve efficiency, productivity, as well as accelerate the adoption of technology. Right? As I saw it, I think the innovation around it is surpassing productivity, right? That we typically get from our own employees due to learning curve and all the other aspects. Right? Artificial intelligence is nothing new. I think we have been at it since 1990, and it's just that it's fast maturing, and it has come to a stage where everyone will use it. Right? You will use it. I will use it. My children will use it. Right? So there is so much of ease that it brings, in terms of how technology can be adopted, even for your daily life. So that's the power of this particular technology. So it will certainly improve productivity for us. It will certainly change the way that we execute projects, the way that we collect requirements, the way that we design things, the way we develop software, test them, and then more than anything else, the code that you come up with is largely a proven code. Right? But having said that, there are concerns around it, and a lot of governments and academia are working on it to alleviate those concerns. But our focus is to really see that whatever code we come up with, whether using generative AI or otherwise, how do we develop software that generates software, number one. Second is that how do we leverage that proven code that we already have in our stable, right? We adopted this approach fairly decades ago. For example, our own product, TCS Banks, 95% of the code of TCS Banks is completely generated based on a very high level of prompt that we do in terms of the higher level specifications that we write. So, it's nothing new in terms of the generative capability that is out there. But the AI around it and the generative AI around it has really, I would say, offers a lot more, ease of use. I put a lot more ease of use, a lot more, very quick to integrate things. So I think it's a very, very interesting technology.
But our jobs are going to be safe or no? That's the ultimate that, all the freshers in the IT space, they're going to be looking at an answer from you.
Yeah, I think jobs are going to be safer. If not, if at all, I think every new technology has only augmented the jobs, the way that people do. The quality of work that we all do will get better and better. And I think the demand for such technologies will only keep going up. So I would encourage each one of the persons out there to learn this technology and be ready.
Bulls had an upper hand over the Bears on the Dalal Street today as the benchmark indices settled higher for the 9th straight session. After a tight tug-of-war with the Bears also buying in banking and financial counters, won over the selling in the IT and the technology stocks as well. BSE's 30-share pack Sensex rose 38 points to settle the day at 60,431, while NSE's Nifty 50 gained 17 points. The top Nifty gainers included names like IndusInd Bank, HDFC Life, Eicher Motors, Apollo Hospitals and Power Grid. The top Nifty laggards were some of the big IT names. We saw Infosys, Tech Mahindra, HCL Technologies, TCS and also NTPC dragging the street today. Now, Commerce and Industry Minister Piaggio Goyal has met top Italian business leaders and his counterpart on the third and the final day of his two-day nation trip. We've also seen the big outcome is yet to be announced. We are now joined by Business Today TV's Karishma Sudani, who is accompanying the high-powered business and political delegation first to France and then to Italy. Karishma, what can you really tell us about the India-Italy Business Summit and its outcome?
Absolutely right. Important key meetings on the bilateral front that are being hosted here in Rome, Italy. In fact, we are also learning that Union Commerce Minister Piaggio Goyal will now be heading to Milan after this in order to hold other key important meetings with the Italian counterparts. In Rome today, what has happened includes a mega CEO roundtable with one-on-one meetings of Italian company CEOs with the minister, and the Indian CEOs also participated in this conversation to understand if there is some kind of collaboration that they could look forward to. We are learning that close to 50 CEOs participated. From India, big names of course include ITC. There was also Ease My Trip. From Italy there was Piaggio, there was Nayara Energy, which these are the companies that also have their counterparts and major presence back in India.
Right now, Karishma, there has also been a lot of talk of free trade deals with the Euro area, UK and Canada during this visit. What's the update on that?
Well, in a press briefing today, in fact, Mr. Goyal not only updated the trade data for last 1 year, where India has done exponentially better in terms of its exports numbers, but he also shared that India's free trade agreement with the UK, EU and Canada are on track, debunking the kind of rumors and media reports that said the one with UK are facing issues. He said that the processes have been on and trade talks will always be separate to what the other aspects or subjects that are being discussed. He also shared a key important development in terms of India's wheat export ban, which has been there for more than a year now, that it will continue to remain under its current decision, because the government is waiting for inflation to stabilize before they open their doors in terms of exporting wheat back again. He also shared that there are no permanent visas that India is seeking from any of the country under FTA, but they are definitely seeking opportunities for young Indians who are looking to study and work and seek training in other countries.
Right, thanks a lot, Karishma, for all that update. Well, now one of the big Italian companies which participated in the business summit is Piaggio, a name already known to most Indians. The company now intends to focus big time on electric mobility, and as Karishma Sudani discovered in her exclusive chat with Piaggio's CEO Matteo Colanino, also plans some big investments in India.
Piaggio has been in India for 14 years, and is a fantastic country, beautiful country, and also one of the biggest area of the world for our business, for the two-wheelers and the three-wheelers. So today I had a conversation with Minister Piaggio Goyal, and we have said that Piaggio will invest for next future in India, in mobility, in e-mobility for three and two-wheelers with our brands. And so we are very happy to say also today that India is strategic for us.
Good to know. Now, and also the electric vehicle policy that the government is so keen on. How's Piaggio collaborating on that note? You do have two and three wheelers, if I'm not wrong, working around in that area.
But we have a lot of technical center, engineer center world, and so Piaggio is ready. We had also vehicles already on the market, so we are ready for this transaction, and we have to follow what is happening, and we have to anticipate the trends.
What is your expansion plans in terms of the product pipeline in India? Are there any new launches expected in the coming months?
but it's too early to say time. We are ready. We have already product. Today is a day where we met the government. We met Shri Piaggio Goyal, and to say that India is important for the future of Piaggio.
And now India's exports have also hit a milestone of $700 billion in the fiscal which ended on the 31st of March. According to the information released by Commerce and Industry Minister Piaggio Goyal, currently in Rome for trade talks with Italian authorities and businesses, exports grew by 14% last fiscal year. Imports stood at $892 billion, ballooning the trade deficit to $192 billion as well. Now, goods exports are made up of 64% of the exports, while services comprise 36% of the exports. India's exports have also risen by $100 billion in the past 2 years, despite the geopolitical issues and a slowdown in the Western economies.
The growing economic activity in India, which has also supported our exports in a big way, as the world moves into global value chains, we will be looking at expanding our footprint both in imports and exports, and that is what strengthens our capabilities to be a trusted supplier of goods and services in resilient and stable global value chains. The number also shows that our current account deficit will be very much under control, given the fact that our remittances have crossed $100 billion. We have very good inflow of investments, and several sectors have contributed to this excellent performance.
And passenger vehicle sales in the January to March quarter have been the highest ever for any quarter till date. So there's good news coming in for the auto space. According to SIAM, the Association of Vehicle Manufacturers, passenger vehicle sales rose 4.5% in the 3 months to 292,000 units. Interestingly, car sales fell during the quarter. It was the SUV and the UV segment which more than made up for the deficit right here. Two-wheeler sales were up 20% in the same period.
Exports are impacted by various regions. One of the large factors is also the global situation. Then the global situation has been impacted by geopolitical reasons, the Russia-Ukraine war. That has also impacted the demand, global demand. And then some of the countries are under pressure with respect to their foreign exchange reserves. And if there are constraints on that, and they are not able to import into their countries, that also impacts the exports from us.
And with that, we wrap this edition. Many thanks for tuning in, but do stay tuned on to India Today for a whole lot more coming up right up on your screen. Good night.